everybody? Rex Bear Elite Project. How the heck are you? It's a beautiful day today. I'm actually out here in the Northwest right now, and the sun came out. I'm shocked. I'm like, thank you. I'm in Colorado. It's sunny all the time, but in the Pacific Northwest, it's kind of a rarity. And so, Colin, you have a beautiful assortment of silver and gold and platinum on the table there that you're going to share with us. And I mean, that's a pretty, that's like one of the old Motorola phones, but even heavier. That's a 7-pound bar.
Whoa, anybody? No, yeah. I'll call you later. I'm on with Rex. I'll call you later. That's important.
It's got a 7-pound screen.
It's a 100-ounce silver bar. We sell a lot of these. Probably sold more of these than almost any company in the country here. This is a very desirable IRA direct investment. I think you said you could purchase one of these a few years back.
Too. Yeah.
Everyone's talking about silver, so I thought I'd bring some goodies out here for us to look at and talk about.
So you offering any specials if somebody converts their 401 and qualifies?
Yeah, so right now we have a quarter-ounce gold standard coin for the remainder of this month. And then I'll preview it on your show. For next month, we're going to be switching over. We're going to have a Trump silver round that we're going to offer. I have it right here. It might be hard to see it, but there's a Trump silver round that we're going to offer. So you're going to be able to get 10 of these for any qualified account next month. Or if you don't want that, you can do a 10-ounce silver flag bar. So that's next month's promotion. If you start this month and you want this, we can do it, even though we do have the gold coin going for this month. But that's going to be our promotion for next month. So if that's something you're really interested in, you have a qualified account, you can give us a call today. We can get the paperwork started for you and get you all set up.
That's a hell of a value, man. Thank you.
Things are, market's been quite interesting this year. The Fed has sort of pulled back their aggressive idea of lowering interest rates. I think they've realized that they're in a pickle with inflation. They can't they can't lower interest rates with inflation where it's sitting currently, and it's not dropping as quickly as they anticipate. Janet Yellen thinks it's going to get back to 2% by the end of the year, which she stated, but I think that's very unrealistic in terms of where the economy is for us to get back to that number very quickly. So it's election year, higher than normal interest rates. I mean, listen, the interest rates historically are not that high, but we've been, I would say, blessed with very low interest rates for 20 years, and so it's not the norm for what people are used to, and the low interest rates for 20 years really created a lot of stimulated markets that weren't true markets. And I think that's what we're starting to realize is that, those 2-3% rates, those should have been held for emergencies. When they did it after 9/11, they cut the rates. It made sense because the stock market, after 2008-9, they had to recover because those lower interest rates created a very, a real estate market that wasn't realistic. But now I think we're a little bit more in a normal market. It's not what a lot of people want because it's not this frothy market that we've seen, but it seems to be becoming more the norm for a lot of people. And I don't think we're ever getting back to 3% rates for the foreseeable future, unless there was some kind of catastrophic event that the Fed could justify lowering the rates that low. So I think we're in brace for rocky, turbulent, and this is more normal is what I would say, Rex.
Yeah, and it's interesting because I go back a few years ago, and I'm in Southern Colorado area, and with the pandemic, the housing market, just everything got usurped up, and prices went nuts. And now there's a ton of available properties out there. Every time I look, the housing prices are going down. I'm out here now in Ocean Shores area, and same thing. I mean, there was a time just a few years ago where there was hardly anything available, and now everything's available. So I can definitely see the markets turning. And there's a few articles that you sent me, and folks, I would strongly recommend subscribing to the Noble Gold YouTube channel because Colin does these quick updates on information, and they have an awesome newsletter that you definitely want to sign up for because the bullet points here are incredible. So there's four articles of discussion that I think are very important. We're going to talk about some good, some bad, some ugly, and some pretty. So the first one, The Economist's in-depth analysis of solar power's exponential growth and future impact. So I'll call that solar boom, kind of like Sonic Boom, Street Fighter 2, but solar boom. So there's some good news there. Good news there about silver. Then we're going to talk a little bit about what it would take for the US dollar to collapse. Hypothetically speaking, what would cause that and what would that mean for you? And then we're going to talk a little bit also about what you mentioned, Janet Yellen discussing the housing, inflation, the outlook of the economy. This one, though, this is doomy. Russian hackers claim to have breached Federal Reserve and they demand ransom. Is it just are they making it up? Are they trying to get some publicity? Did they actually hack into the feds? And now are the feds going to say, well, this is another reason we need to blockchain everything and have a new digital currency that's centralized? I don't know. But like, what are your thoughts on this? And great bullet points.
Yeah, I want to end. I want to end on the Russian hackers.
Okay.
Let's start with silver because I think what it is a lot of times with silver, people talk in big numbers about the different uses, but I sometimes you just want to get granular in terms of what silver is used for in solar panels. So there's 20 grams typically used in a solar panel, and where is this kind of solar energy? Where how much of the market is it? They predict it will surpass nuclear energy. They predict that the amount of solar panels needed is going to double every 3 years. So the amount of solar panels coming to the market it's like nothing we've ever seen. I mean, in 10 years from now, you will not see any house built in the last 10 years that doesn't have any solar, unless you live in an area that doesn't have some type of sun, right? So, but the majority of the world can use solar panels to some form. China has a tremendous demand for it. Their middle class is continuing to grow. And so they're going to be continuing to do it. And they're really trying to gobble up as much silver as they possibly can because they know that this need is here and it's going to continue to be here. This market is not going anywhere. Energy costs have gone up, almost double in the last 2 or 3 years. I mean, everyone that's paying electricity knows that it's not going anywhere. So whether you're going to wait on it or however you're going to do it, and I know there's an upfront cost, but having a solar panel is going to make it easier to have more of a fixed cost for people that in their home. And I think in your retirement, as you're going towards retirement, you want to get closer to more fixed costs, or at least have an idea what your costs are going to be, because there's so much unpredictability in other things. Healthcare costs have gone up more than 10% every year. Food costs have gone up 20, 30%. So to have an energy cost that's a little bit more sustainable makes a lot of sense for an individual and for the world. And we're seeing government buildings all over the world continue to grow and have solar. I mean, this is not going anywhere. So it's 20 grams of silver right now per solar panel. And the demand of that is going to double or triple for the amount of solar panels that we need. So this is a pretty significant thing. And basically, the use is the silver gets broken down because it's very conductive. And so it allows the light to come in. And that's why they need silver. It's a very conductive metal. And so this is an industrial metal that is needed. So when people talk to me about what should I look at? Should I look at gold? Should I look at silver? You're looking at the industrial uses. That's why you're buying this. You want that heavy industrial usage, and you want also a metal that is in high demand. And that's why this silver is really an exciting metal. And we talk about this a lot, but it's still lower, substantially lower than its all-time high. This year, silver did break 30, almost $34 an ounce. We're sitting below $30 an ounce right now. And the all-time high for silver is 50. So what I always tell people is like, think about everything else that's in high demand. Is there anything else in the world in high demand that hasn't completely exceeded its all-time high? And I don't think there is. I don't think there's one other thing. You can't name one other thing that's gotten cheaper over time in terms of high demand items. But silver is still below its high. Gold broke through 2,300, still high demand, but silver is still below where it was. So it's you got to just look at the industries that they use silver in when you're doing your research. Think about those things, and that's the thing about investing is like you sort of have to guesstimate the future a little bit and figure out where things are going. And so I think that's the thing, Rex, that people need to look at when they're looking at this metal is it's still below its all-time high and it's used. Solar panels is one of thousands of uses, but I do think solar panel alone can help push the price of where it is today.
I mean, that's some pretty cool news. And I actually had some friends of mine reach out to me the other day. They've been watching Leak Project since, I think, 2017. We've been talking since, I think, 2017, 2018. Right. Several years ago, they ended up getting gold and silver through you guys as you look at the price then versus now. But anyway, they were just like, thank you so much. And they're ecstatic. And they wanted me to say thank you to you also because you ended up knowing a bunch to their place.
Right.
And yeah, so they're super happy. But what is up with I heard Saudi Arabia. This is big news, folks. Like this is huge, but nobody's talking about it. Like if there's a little blip on a newspaper that's like, okay, something about Saudi Arabia isn't taking they're taking other currencies now.
Correct. Yeah. So there's the petrodollar, and that, one of the countries, obviously Saudi Arabia. And that's what the BRIC nations are talking about. They're having a big meeting in October in Russia, is that they want to have their own way of transacting business. And so the petrodollar is giving the U.S. a strategic edge. It's something we've been doing for a long time. And basically, big countries that are doing large transactions in oil have been using the dollar. Now Saudi Arabia and many of these countries, Middle Eastern countries, want to move away from the dollar, from these large transactions. And it hurts us because we need dollars being used to keep us as the world's reserve currency. And our status as the world's reserve currency, can change. Nothing is set in stone in the world that we are the world's reserve currency. We only became the world's reserve currency in 1944, the Bretton Woods Exchange, because Great Britain was going through, and does this sound similar? They were going through heavy debt from World War II and other wars. They had market volatility. The UK did. Faith in their currency had dropped pretty considerably. And that opened the door for the dollar, right? And so those are things that I think people don't realize is that, yes, we do have the strategic advantage now, but there's nothing set in stone. Do I think the dollar could lose its status? Sure. Is it but it's already happening. I think that's what people don't realize. If you go back 30 years ago and you look at the world's reserves, different countries all over the world, most of the world's reserves was like 80% of US dollars or US treasuries. Right now, we're at 58%. So the decline of the US dollar being dominant and the treasuries being dominant has already happened. And speaking of things that people aren't talking about is that the treasuries actually just recently started doing a buyback of their bonds, because what people don't realize is that with these higher interest rates, which a lot of people are taking advantage of, it's also creating a problem that all of these older bonds that are at rates far below the rates of today, no one's buying those bonds. And so the Fed is actually having to buy back. So think about how crazy this is the Fed's borrowing money at almost 5% to buy back bonds at 2 or 3%, because that 2 or 3% bond market is dead. And our bond market is what keeps our economy going. So they're buying back and they're trying to keep liquidity in the market. That's why they're doing it. That's the strategy behind it. But we're borrowing money at 2 or 3 percentage points higher to buy back bonds for us to keep liquidity in the market because no one's buying these 10-year treasuries that are sitting at 2 or 3%. It's something that's just recently happened. And it's a move that the Fed will do to try to stimulate. They're trying to get more movement in the market. They're buying short-term bonds to buy these longer-term bonds and pull these 10-year bonds out of the market. But it is one act to try to stimulate things, but also shows how bad things are for us as a country that there's no buyers at these 2 or 3% bonds right now. And it's creating a lot of problems because, every 7 years, our US Treasury bond market doubles. The amount of bonds we are issuing have doubled. They double every 7 years since 2001. That's how we've been able to create this cheap debt. That's how we've been able to do this. That's why these low interest rates, in a lot of ways, have created so much wealth, but in a lot of ways have hurt our country because we've pushed rates down to an unrealistic, not a real number. And the way that you're able to do that is you have to expand the money supply in many different ways and keep the liquidity going. So the Fed is buying back rates right now. That is something that just started to happen because the bond market is just having such a hard time. And even at some of these higher rates, people are not interested. The interesting thing about rates right now in the bond market is that you're seeing a lot of demand just short term, which is sort of counterintuitive. Like if you can get a 10-year bond at 4.5%, you think the market would be buying that up. But I think the market is saying that maybe rates could go even higher. Maybe the Fed isn't going to be able to do this. Maybe they're not going to be able to lower interest rates and rates could go even higher than where they are today. Because that's the only reason, and follow me on this, Rex, that's the only reason that short-term debt would be more desirable than long-term debt, right? If you believe that rates are going to go down to below 4.5%, then you'd buy the 10-year treasury, right? Wouldn't that make the most sense? But the fact that short-term bonds are selling at such an unbelievable rate is that there is a percentage of the market that believes that maybe rates are going to go even higher. So just a little sidebar. Listen, nobody knows 100%. That's why you have to hedge your bet. But there is a consortium of people out there that believe that maybe the Fed is not going to be able to lower rates this year.
I mean, I've heard this saying that goes something like, don't throw good money at bad investments or don't throw good money at bad money. I mean, that's kind of what it sounds like. They're literally borrowing money and they're spending more on the interest to buy back loans that's wow.
Yeah, because it's liquidity. They want money being moved in the market. They don't want those treasuries sitting and staying stale. Those old treasury bonds, they want those moving out of the market and moving, and they want more money moving. It's a liquidity play for the markets. It's because the bond market is sort of having issues selling bonds. Countries are nervous, even at these higher rates. Countries are nervous at buying our bonds at this 4.5-5% rate, which it leads me to believe either they're worried about a potential default, they think rates could go higher, or they think they can make money in other things. And I think it's probably a combination of all of those things. So if you go back June of last year to today, gold is up about 20%. So, and you have all these central banks continuing to buy gold. Why would they buy bonds at 4.5% if they can make 20% in gold, right? And if inflation is a true inflation number is, let's say, 10%, you don't want to buy assets at 4.5%. You got to be careful. You got to have a limited amount of assets at that 4.5% number, right? You got to make close to 10 to break even. And so I think it's going to be interesting at the end of this year is I think that, the Fed, buying back some of the bonds, if they can't lower rates, what are the other options, Rex, to stimulate? What do you think the other thing that they could do would be?
I'm not going to say that publicly, but I don't like what could they do, man?
I mean, quantitative easing is the most likely scenario, right? For me,
Oh,
they could just start really expanding the money out there in a different way. If they can't lower interest rates, and the Fed has to wait They have to get inflation 2%. The Fed's stuck, right? So what are the options? You do quantitative easing. Now, listen, the last time we did quantitative easing in 2009 to 2011, gold went parabolic. You're talking 20% plus per year. And so that's why Bank of America thinks, with all of our debt problems, with the economy not doing as well as a lot of people predict, that maybe there's going to be a stimulus situation to try to help things maybe before the election. There could be something happening. The Biden administration has talked about trying to give more money out there to buy loans because, or to make money a little bit cheaper to buy housing. So they're starting to tap. They haven't done a large amount, but there's a small amount they're talking about doing to try to open up the market to get more money out there because the housing market is in such shambles. And that affects so many different things. But ultimately, they're going to try to stimulate in some form or another. And typically, a stimulation situation is going to be good for hard assets. That's why you want to be in something that has more of a limited supply. So, solar. We talked about solar panels. Let's talk about mining with silver. They anticipate the demand for silver is going to go up this year by 17%. There's a shortage of silver ounces. There's no way they're going to be able to fulfill that demand. So you're looking at silver below 30. Mining companies are obviously, they see the future of where things are going. So they're going to ramp up and do everything they can to try to get as much silver as they can. So there is a shortage of ounces of silver based on what's currently happening. And then I think if you see a money stimulation situation with the Fed, or maybe this administration tries to open money up, because I believe, and this is just me alone, is that if we don't see something good happen with stimulation or money before the election, then I think the writing's sort of on the wall, and I think Trump will win. This is totally my personal belief. So I think that there's going to be some kind of stimulus happening to try to generate some money into the market so that they can sort of make a plea that the economy is doing a little bit better. And so that, and it's not, I don't think it's an unrealistic thought that this can happen. I mean, obviously, he wants to get reelected. And so I think they're going to try to move some things around, maybe give some pretty heavy incentives for housing, maybe similar to what they did with the college market, the college debt. There's other things that they're going to try. There's some levers that I think are going to be pulled before the elections to try to stimulate. And I think that will be good for tangible investments.
Yeah, and so do you see the possibility of the dollar maybe not collapsing, but like let's say something big happens with the US dollar and we continue to try and boost the economy somehow, but things don't work out as well. Like what would happen to somebody's 401?
Yeah, so I mean, yeah, so let's go into now, because that's what I want to talk about. I want to talk about this hacker situation.
Yeah.
And so, this LockBit hacker group says that they have 33 terabytes of information. And the Federal Reserve says they haven't commented on this yet, but they've hacked other governments, they've hacked other large organizations. So it's not unreasonable to think that they do have this data. Now, when I look at this hack and this potential situation, I go, what data do they have? The article talks about them having personal data of people like us. But to be honest, we've all had hacks. Target and all these companies have hacks of our information. You and I, our information is not that important. I think the information that would be important to know is who the Fed is loaning money to, how much debt there is out there that maybe because they do secret loans. They don't have to report everything they're doing. So my opinion, I think they have data that's catastrophic potentially to the government. And that's why they're trying to keep this under wraps. I don't think it has anything to do with us. I mean, we've all had our data hacked at some point or another. I mean, so it's very interesting the way that article came out. And I think that the truth, we may never know, or the truth, if they're really holding ransom, could be that the Federal Reserve has some things going on that they don't want to release to the public. And that's my gut for this article is that there's more to this story, because I don't think another hack of our personal data is actually that surprising. I mean, I think that's happened. It's happened many times. Equifax, I mean, you can go down the list. I mean, we've all had data hacks. So ultimately, when you go back to the dollar in your 401k, the way that one of the ways the dollar could collapse would be a massive cyber attack, which would affect the US dollar. That is one of the ways that it could affect us in a way that we could lose our status. The typical ways that countries lose it is, Argentina and Zimbabwe and all these countries, is faith, skyrocketing debt, which Argentina and Zimbabwe have had. Also, just overall faith in the currency. These are all the big things that can happen. Cost of goods getting so expensive that people just don't want to use your currency anymore. These are all the things. But a cyber attack would also fall into that category. A black swan event would fall into that category. So I don't know if there's truth into this situation with LockBit, but I do think it is quite interesting. And it is something to keep an eye on, that they're threatening to release this information. And I just don't believe the story that was put out there that the information is about us, because at the end of the day, it's pretty easy to get information about citizens in this country. I don't think it's that hard to do that. So what would happen with 401ks? I mean, I think that that's something that would be very concerning for most people's 401ks if we continue to have a loss of faith in our currency. I think our most 401ks have the majority. I think it's like 85% of the stocks and mutual funds are U.S. based. Some people do have foreign equities or foreign mutual funds in there, and then they would also have some bonds in there too. But it's the majority of people's 401ks is in U.S. based stocks, so it would significantly affect a typical 401k situation. And then on top of all that, there's the very onerous and expensive fees in 401ks that people don't always know about. As typical 401ks fees are between 1% and 3%. So you got to make 12 to 14% to cover the fees of the custodian and Fidelity or what Schwab or any of those, because they're charging in. And these studies are all out there because you have the custodian fee, and then you have the fee of the mutual fund every time they trade. They're consistently trading in and out of stocks because that's how they make money within the mutual fund. People don't realize, they feel like, oh, there's a no fee, no load situation. It's like, well, every time they're selling a stock within that mutual fund, they are making a spread there, which ends up being a fee. Whether it's a spread or a fee, it's the same thing. So I think that it could have an effect on people's 401ks. And so, yeah, that's, another reason to sort of have your eyes wide open in terms of what's happening this year. This year is one of the most, I think, either damaging, exciting, or potentially interesting years in the financial world, with the election, with the higher interest rates, with these, dollar concerns. There's threats coming from every different way this year. And I think that's something that all people should be looking at in terms of their accounts. And I think that the great thing about what's happened in the markets, Rex, is that, with people leaving and going to new jobs, a lot of times they have access to money that they never did. So, when you're stuck at a job with a 401k, your money's stuck there. But once you leave that employer, you can make your own financial decisions about where to go. And I think in years past, you could make a strong argument that real estate was a good play. I think right now it's tougher to make that argument. And I think that alternative assets, cryptos and gold and silver, platinum and palladium, I got a 10-ounce platinum bar here too. Those are making a really strong push in the market as being viable assets, just because I think some of the traditional ones are not as safe as they once were, just because we're in a this year especially is in a very it's a very curious year in terms of rates to money to inflows and outflows. It's not like a traditional year, and then you have an election coming up, and those things typically are very volatile for the markets.
So I know you guys are super busy right now. What are the most popular? Like, are people buying the 100 ounce bars of silver? They buying junk silver, a bunch of like pre-50 silver dimes. What?
Yeah, I would say these, 100-ounce silver bars are really popular. We're selling a lot of those. We've seen actually a very interesting, it's not a huge amount, but we don't sell a lot of rare numismatic coins, but we have seen a big push recently because the numismatic market has really dropped off a cliff. So we've had a number of people buy, this is late 1800 St. Gaudens coin. These are trading at the lowest prices I've seen in many years. So a lot of people have been diversifying with some of these, rare coins, and, you're getting great value. So some people that are doing cash purchases that are looking to diversify that have already bought some bullion from us are getting into some rare coins. This is like a starter kit of numismatic St. Gaudens. So that's a pretty interesting. I mean, I think to be able to hold a coin, this coin is from 1899. This is a St. Gaudens. I mean, this was a coin that was in circulation that people were used to buy things. It's pretty rare to buy a piece of history that also has tremendous value and it continues to go up over time because it's got gold in it. So for people that like the hobby aspect of it, they're starting to buy more. We're seeing a lot more purchasing in the numismatic world, just because I think it's finally a good time to do that. There was times where it was really expensive, but right now I think there's some opportunities there. So I think it's, really just people are just buying gold and silver and putting it in their safe. They're putting it in a safety deposit box. We're storing for clients in Texas and Delaware as necessary. But I think what people are doing is they're thinking gold and silver similar to how they're thinking about cash, is that they're using it as a way to just have some money that's liquid, but they don't want to get the 4.5% in the bank. They want a better return. So they're diversifying with gold and silver. And obviously we can't guarantee any returns. Nobody knows where the market's going to go, but I think a lot of people are starting to call us and say, like, I want to get out of the bank. I want to get into some gold and silver as a way to diversify some of the funds.
Is platinum still a hot
Platinum
prospect?
and palladium are actually trading very close to each other in the mid 900s.
Yeah.
Platinum is pretty exciting. They're using platinum. We met with the World Platinum Council a few months ago, and they're using platinum to replace palladium and catalytic converters now. So the new Ford F-150 Lightning that everyone's excited about has about $2,000 of platinum in that vehicle. So platinum's become very desirable, but also still very affordable relative to everything else that's out there. I mean, it's less than half the price of gold. So it's a still desirable metal. It's actually more rare than gold. So I think if you looked at our purchasing right now, you're looking at about 65% silver, 30% gold, and then you're seeing about 5 to 10% is buying in platinum right now with us.
And so somebody can have all that in their 401. They can mix and match.
Correct. And you can switch. Yeah, correct. So one of the things that we offer that's unique because we sell bullion in tremendous volume is we can do a metal to metal exchange. So what a lot of people are saying, like, yeah, I like the idea of silver, but I really like gold because it's really safe. So what a lot of people are doing is they're buying silver heavier now. And then once silver goes up to like $50 or $60 an ounce, they can swap that silver into gold and go into the what I would say is a little bit safer of the metals, a little less volatile. So, or they could swap it and go into platinum. We do all that for you. So that's easy to reallocate. And there's no taxes for that. That's a tax deferred exchange within the IRA. So we do all that for you. So that's easy to do for somebody. And we've been doing that a lot. We've had some people already start to do that. I think it's a little early. I still think silver's got a lot of room, but there's people that bought silver from us at $14 an ounce during the pandemic. And so they've seen a really high rise in silver. So they've been swapping some of their silver into gold. So we've been handling that transaction for them. It's pretty easy for us to do.
Cool. So you offering any specials if somebody converts their 401 and qualifies?
Yeah, so right now we have a quarter ounce gold standard coin for the remainder of this month. And then I'll preview it on your show for next month. We're going to be switching over. We're going to have a Trump silver round that we're going to offer. I have it right here. It might be hard to see it, but there's a Trump silver round that we're going to offer. So you're going to be able to get 10 of these for any qualified account next month. Or if you don't want that, you can do a 10-ounce silver flag bar. So that's next month's promotion. If you start this month and you want this, we can do it, even though we do have the gold coin going for this month. But that's going to be our promotion for next month. So if that's something you're really interested in, you have a qualified account, you can give us a call today. We can get the paperwork started for you and get you all set up.
That's a hell of a value, man. Thank you.
Yeah, it's. I think with the election, this is something we offer. The round is just for free. It's just for people doing an account. So for some people that want that, or you could do this, this 10-ounce silver bar. So yeah, it's exciting. I think it's a good time. We also have the Kevin Sorbo masterclass that we're offering to people. It's free. It's less than 40 minutes. Talks about the economy. It talks about alternative investments. So if you want to learn and watch some videos, Kevin Sorbo obviously was Hercules, tremendous actor, good friend of Noble Gold Investments. And so if that's something you're looking to get into, you can either read our guides, talk to somebody live, or you can just watch our masterclass on investing. So there's a lot of good ways, and then the YouTube channel, of course, you mentioned earlier. So there's a lot of good ways to get educated on what we do. And any of the ways that we can do that for you, we want to continue to educate people on this investment and what it does, and pros and cons, and how you buy it and how you can. And so it's important that we continue to educate people at Noble Gold Investments. That's something we've always focused on. But yeah, I think the best thing to do is to give us a call, mention that you saw us here on the Leak Project, and then we'll get all the free information out to you.
Yeah, that is so cool. And you know what? I'm looking at him right now on your website here, and he looks pretty much the same, man. He looks good.
Yeah, he looks great. Yeah, he's just a great person, smart, savvy investor. When we discussed bringing him aboard about a year ago to be a partner in Noble Gold, I wasn't sure, what his stance was, and he actually has been buying gold since the 80s. So he's a believer in it. Loves the yellow metal. Does own silver too. So he's not just a spokesman that talks about it. He actually really believes in the metal and owns a lot about it. But he's a very smart and savvy investor. And his story. We talk about his story during the masterclass, also of what happened to him in Hollywood. That basically when he came out, and had some conservative values, and he was sort of, Hollywood wasn't as accepting of him as they should have been. And because obviously what you believe politically shouldn't affect your acting career, right? So he's got a great story about it, and he's had to be very resilient and create his own path. And part of that was investing. And so he talks about that in the masterclass also, is what he had to do, how he had to educate himself, because things changed for him in Hollywood, and he had to adapt. And I think that's a big story and a big learning lesson for a lot of people today. Is I think we all have to adapt to changing times. And Kevin talks a lot about that in the masterclass.
Cool. Yeah, I'm actually looking forward to watching that. I haven't seen it yet, so.
Oh, great. Yeah. You should definitely check it out. It's jam-packed with great information. And I think from learning about the banks to investments to real estate, I mean, he kind of goes over everything in there.
One more question. You've got a book that's coming out, or has it been released yet?
It hasn't been released. I do have a silver book that will be coming out. I think we're looking at in the next few weeks. So next time I see you, we'll have the book available. It's been a passion project for the last 2 years, and so I'm excited to release it. And so yeah, next time I talk to you, we'll have a book on the way, and I think it'll give people a lot of good information, a lot of insights into the markets.
Right on. Well, I don't know how you do it all, man. You are super busy. You're one of the few people out there that does more work than me. It's it's like, you have a robot made that looks just like you? That I'm impressed, man.
Yeah, I love what I do. I love talking to people and educating them on this subject. And I think, the more you get educated, the more you learn. I think it opens your eyes, and I think that's something that's so important today's day and age. And the beauty is with YouTube and your channel is like just getting educated on the world and what's happening, and what's happening in our atmosphere. I mean, there's just so much to get educated on. So it is work, but I do really, really enjoy this. So it's just this, what we do today, and then, family and the 3 little kids that I have running around. So that's the majority of my day. But I love it. I absolutely love it.
Right on, man. Well, absolutely. I can tell. And thank you very much, Colin. I appreciate it. I hope you have a beautiful day.
Thanks, Rex.
Thanks everybody for watching. Hit the bell, be well, and be the change the world needs to see. It starts with you.